Hey everyone, I am Sami Abusaad, Director of Education at T3 Live, here with another weekly video to share my watch list with you and go over the market. I hope your weekend is off to a good start. Let's go ahead and take a look at the market, and we'll go ahead and look at the watch list. Market remains just bullish. I thought we would pull back to 160 is what I said, and we pulled back I think to 160.30. Let me take out the crosshair tool. We basically had one red bar. This was a red bar, but barely. So we pulled back to 160.30. I thought we'd pull back to 160 and then maybe eventually to 158. Market is just super bullish at the moment. We did get to resistance, pulled back a little bit. It looks like we're headed to 170 on the Qs. The only issue to be aware of is the location on the weekly chart. Now that we have a narrow range bar, an inside bar under 160.30, that would actually be a sell setup on the weekly time frame. So that would be kind of the line in the sand now that we shouldn't cross. Again, 160.32. Otherwise, stick with the bullish bias. I think I have only one bearish position, and I have 1, 2, 3, 4, 5, 6, 7 long positions. I have Apple, I have SBGL, which is gold. This is more of a long-term position, by the way, and so is Apple. So is Apple from 146.38. And I have NVAX, I have FLDM, I have Starbucks, I have USO, and I have KO. So I have a bunch of long positions, and I have only one short position, which I think I probably missed the trail on it yesterday. I got to target, but you can see just shy of target. So now I have to trade it bar by bar. This was a weekly sell setup, but that's about it. That's the only short position. I have a couple of earnings plays now that we're in earnings season. So what I do is like I did with the Xilinx, I get in before the company reports based on a specific pattern and hope that it gaps in my favor. If it gaps in my favor, then I look to keep it, which I did with the Xilinx up until the end of the day. It wasn't the high of the day, but it was pretty close. It closed pretty close to the high of the day, and then when it goes against me, I look to get out right away, almost within 5 minutes after the open. So that's the formula that I have. Be sure to hit the like button if you like this video. Also be sure to check out the links in the description of the video if you want to find out more about the strategic swing trader, if you're a swing trader, or if you are a day trader, the strategic day trader room. As for the watch list, I got some still mostly only really bullish watches. I'm a bearish trader by nature, but what I'm finding is just more and more bullish stuff. CYH is a daily buy setup. What I like about the CYH though is not so much the daily, it's the larger time frame. I know this is beaten down, basing at the lows, but if it can successfully do a double bottom here, it should explode. Okay, so that's what I like about it. I'm in the as I said, the SBGL. It's a similar play. Okay, similar play. So the CYH is a daily buy setup with an clear entry over 390. AQUA is a transition A breakout over the base. That's not bad. I like it when the base is a little tighter than what we see on the AQUA, but it's not bad. Duke, DUK, Duke Energy, is a weekly buy setup. So that's a nice little, that's a nice pattern. Only issue with it, it started with a wide range red bar, or a couple of them really, and which is bearish. ELGX is a transition A buy setup. It happens to be a penny stock. I don't care. I don't care about the price of the stock. 75 cents or $75 or $7,500, right? I played the PIR, which was a penny stock. It went from, entry was at 62 or 63. Oh no, the entry was at 33, and then the exit was at 60 something. It went from 30 some cents to $1, right? So it still went up 300%. In fact, that's what happens with small stocks. It's much easier for a penny stock to go from 30 cents to to $1 versus a $30 stock to go to $100. So if anything, I actually prefer the low price stocks, if anything at all. But the truth is, what I care about is the pattern. If the pattern's there, then I don't care about the price of the stock. Okay? Showed you the PIR. This is very similar to the DELF, which triggered 2 days ago. Is a transition A play. It worked. I actually passed on it. I had it just as an idea for the strategic swing trader members. I call official trades. I scan my stock universe, then I call official plays, and then as just kind of an added bonus, I give members some additional ideas. The official trades 100% of the time I take. The ideas sometimes I decide to take if I'm aggressive and the market is really good, and sometimes I pass on them. So this was just an idea that I didn't take. This is the same setup, exact same setup. ET is a daily buy setup. Looks good. I like the hourly mostly. Beautiful hourly chart. It's oil. I'm in the USO from 984. Okay, from this day, 984. Still in it. Okay. I did take half at 11 though. So ET is oil. FNSR is a weekly buy setup. Beautiful weekly chart. Entry would be over the base, stop under it. I'm in Starbucks. This was played as an earnings play, meaning bought it at the close on Thursday and I gapped it basically. But I kept a small position as a weekly buy setup play, as a long-term play. We'll see. Not totally in love, but my stop is pretty secure under the bottoming tail, so I got a good amount of room for it to work. Fran is another transition A. Moving average is not underpriced. If you look at the DELF daily chart, the moving average was below price. That's how I like them, when the moving average is below price. In the case of the FRAN, the moving average is not below price, but it's still the same concept. It's a transition A buy setup. And DLS already transitioned. This would be the secondary buy setup, except that it already triggered yesterday. I didn't see it. I didn't have it on my watch list. So now can play as a breakout over the base, stop under the base. Though the correct entry was the buy setup over this bar's high yesterday. UNFI is a transition A. To tell you the truth, I tried to buy it on the last day of last year, 12/31. At 1061 was my entry in the system. My order was 1061. It got to 1060 and it closed at 1060, and the next day it gapped a little bit above my entry, and it never came back to 1061. So I missed this, and it went to 17, I think. No, to 15. And so now it's starting to base, and I like it over the base, stop under it. You don't need to give it all the way back down to here, the stop. You can just put it under this hourly pivot, under 1265. So those are some long watches for tomorrow, for Monday. Some short watches. Short watches are not very good. Look, at this point in the market's rally, after rallying for a whole month, right into the resistance on the daily, we do have more room to 170, as I said, and right into the declining 20 on the weekly chart. I would rather be looking for shorts, not longs. To tell you the truth, I'd rather be starting short positions. But when you scan your stock universe and you find mostly long positions, what does that tell you? What does that tell you? That tells you that the path of least resistance is up, right, to the upside. So this is how actually I end up trading with the market, not against it, not because I'm such a genius or I can read the market better than anybody else, but because I scan my stock universe and I let the patterns tell me what to do. If the patterns are setting up long, it's because the market is bullish. Does that make sense? And I end up playing long. If the patterns are setting up short, it's because the patterns are short. Does that make sense? Or the market is bearish. So that's how I do it. And as I said, I have 1, 2, 3, 4, 5, 6, 7 long positions and 1 short position. And as I said, I do have a couple of other earnings plays, but those are different. So I let the market basically, or I let my scanning do the work for me, right? So some short watches, they're not setups yet. FDC and FISV, one and the same. The FISV bought the FDC, I think. So I would only do one or the other, whichever has the better pattern and the better stop, the tighter, the larger reward to risk. The match is the same exact concept, running up a lot, starting to get a little climactic. Let's see if it's into resistance. Not into a significant area of resistance. This is what's known as a loose resistance area, not tight. So it's a weak resistance, but I like the climactic run up on match. The NVCR, I already got a couple hundred shares yesterday. So this is climactic also. Crazy. It's crazy. And then OZK is a possible breakdown. It had a breakout and it failed, so we're looking at a possible breakdown. Of course, I won't do it unless the moving average starts to hug price and curl, like so, right? And then maybe short, and then short. Does that make sense? So those are some short watches for you to consider for Monday. Now, I'm just giving you the watches for Monday because I don't want to give you the watches for every day of the week. But if you're part of the strategic swing trader, you get the watch list for every day of the week, the daily watch list. On top of it, you get my plays, the actual plays that I'm looking to do, that I'm doing. I mean, I have all my orders in the system already. Okay, I was going to show you, but you know that kind of defeats the purpose of being a paid member if I'm going to share my orders with you, you know, here. So I do the work, I find the plays, you trade my system, keep all the profit. The only issue is you need to be a subscriber. It pays for itself and 10 times more. Plus you get the education, you get 5 hours worth of classroom education, my course. I think it's 100 and I don't remember how many pages, but like 150 or 120 plus pages. So you get that. And you get the weekly coaching. So, and then you get during earnings season right now, I send out alerts in the afternoon at around 3:30 to alert members what positions I'm getting into before they report. So during earnings season, and we have 4 earnings seasons during the year, I also trade the earnings companies. So you get an alert at 8:30 in the morning, and you get an alert towards the close to alert you which positions to get in. So that's what the SST program is all about. I hope if you're interested that you click on the link and check it out. And that's all for me today. Enjoy the rest of the weekend, guys, and I'll talk to you sometime next week. Take care, everybody.